Hi there, I'm Dean Heskin, President and CEO of Swiss American Trading, and thank you for tuning in to our podcast entitled The Secret War on Cash, where we take an in-depth look at some of the changing and evolving dynamics that exist in our not only domestic markets, but our global markets as well. And I have with me my co-host, Chris Agelastos. Chris, good morning. How are you this morning?
Good morning. Doing well. Getting ready for all the Thanksgiving festivities this coming week.
We're right around the corner from that,
Yeah,
and this rest of this year is actually, it already has the fourth quarter this year blown by.
I
And
know.
with the holidays right around the corner, that's going to happen even more quickly. I think the election kind of does that too. I mean, it's a lot of
Yeah.
anticipation going into that, and big changeover this year. And so I think everybody just felt like a big sigh of relief. I know my phone, thanks the election being done, because the political texts and phone calls have seemed to somewhat
Uh,
subside, not completely, but for the most
yeah.
part have.
I don't miss those ads, that's for sure. All
Oh,
day
good
long.
heavens. Good heavens. I'm traveling, so thank you for taking the time to do this here.
Yeah.
Let's get right into it. Talking about the election, there's been certainly a lot of things happening in the markets in short time. Nothing is per se changed, but it's interesting, and this isn't unusual to see, that there's been when there is an election, that the markets respond in a certain way afterwards, but there seems to be a little more than usual activity that's taken place. And in all fairness or sincerity, personally speaking, I was kind of wondering, okay, it looks like President Trump, or former president and soon to be our current president Trump, getting into the office would change things quite a bit. But and not knowing what that looked like, Chris, I really was kind of surprised to see, especially as you look at what we do in the metals market in gold and silver. Part of me was like, okay, well, now our marketplace is oftentimes perceived as a safe haven, some place to go when there's concern about whatever might be happening in the financial markets or the economy that would run contrary to the more, what do we want to say, growth oriented times or things of that nature.
Hmm.
And or like if there's inflation, and part of what's expected or anticipated is like this change in administration is going to create a lot of good where there once was bad, and hopefully that is what happens.
Yeah.
But I did find it interesting that right away here, we're just barely out of the election time, and again, a lot of these anticipated changes are coming. Our first article we'll take a look at here that CC's got on the screen. Goldman says go for the gold as central banks buy. Fed's cut Fed, excuse, they buy based on anticipated Fed cuts in 2025.
Hmm.
And now Goldman, which we've talked about them before, they tend to be a little more conservative with a lot of their projections, but they're still sticking to their guns and saying it, because they've been one of the ones that have said, we expect to see gold hit these higher prices. They're probably one of the most conservative that I've seen, consistently seen, as they're talking about gold by the end of next year being at $3,000 an ounce, which is still high. I mean, we're looking at gold
Yeah.
at roughly 25, 2600 range, been kind of hovering there. But they're very much so sticking with it, that hey, there's still a lot yet to come. Gold being one of, in the commodities market, one of the best performing assets. They still anticipate seeing a lot of this growth. So you think they're right, Chris? Is this something that, even with this change in administration, this trajectory that metals prices have been on is going to continue?
Yeah, absolutely. And the nice thing that I guess for gold, or people who hold gold, is that there are multiple factors that have been pushing the gold prices upward, over the last several years. And so, if one or two things change in the economy or in the world, maybe whether it's interest rates or some wars overseas, things like that tend to push markets up, or like the election that we just went through. If one thing changes, gold still has a lot of momentum behind it. Now if everything becomes rosy, maybe we'll see some some dips. But what was great actually to see is, as soon as the election was over and there was a definitive winner rather than dragging it out for a long time. Gold prices came down like, gosh, $150 or so an ounce, which is a pretty big move because gold kind of moves nice, slow and steady, as we typically like to say. But it's already starting to march back up, and rather than taking further dips, and that just shows some of that strength that is there. And while the election maybe was one of the factors, pushing it, there was still a lot of stability and strength in the price. So, and you're right. Goldman is usually all of these banks and investment firms are usually, soft on their predictions for gold. And I think they probably would prefer to see their clients go into equities and their bread and butter products anyway. But
More
but
managed monies or investments. Yeah.
yeah, I mean that's what they do, right? That's
Right.
their specialty, and so they want people to head in that direction, if you will. But yeah, with U.S. interest rate cuts expected, more central bank buying, that's really what's telling them 3,000 an ounce. And remember, I think it was last year, they were predicting, I want to say 26, 2,700 for gold, and as a top for this previous year, and we surpassed that. So I think we're going to
Right.
see much higher than 3,000 an ounce in 2025. And if I'm off, I don't think it will be by much. Trump in office, there's a lot of concern still about escalation of trade tensions. Um, concerns over U.S. financial stability because he's talking about making a lot of changes, which hopefully long term are good. But in the meantime, that's turmoil, and anytime there's uncertainty in the markets, that usually pushes metal prices higher.
For sure. No, absolutely true. Well, and so the reason I wanted to add this second article to take a look at here, everybody's going to have an opinion on what the market may or may not do and
Hmm.
forecast or projections, et cetera. But as we look at what Goldman has said, we can couple it or kind of parallel this with UBS. In fact, the headline says it all. UBS joins Goldman in forecasting gold's rally isn't over. And their projections and forecast are not the same, but pretty close to what, I think they're in the 2,900 range or something to that
Yeah,
effect.
29.50. Yeah.
And but it speaks to the fact that this is not something that us, the gold company, the people who have been dealing in physical metal for 42 years, over 42 years now,
Mm.
not just something that our biased opinion is taking a look at, but the financial world is recognizing these same things. And to your kind of point here, Chris, this is not a single faceted reason that gold prices are expected to move. I mean, we are in a global continuum of various factors that are kind of prompting or motivating gold prices and silver prices higher.
Yeah.
And these factors, again, with a lot of anticipation and a lot of optimism, I think that certainly more than we had a few months ago, that what we might see in the next few years in our marketplace, our economy, with this changing over of the administration, they still have some real issues to deal with
Right.
domestically. There are a
Yeah.
lot of things that are happening globally, many of which are not really directly under our control. So it's not to say that things are just going to magically recover or change, but what Goldman and UBS is looking at here is the fact that these fundamentals that exist, they exist.
Yeah.
And taking kind of a perfect example, they're going to attack interest rates and inflation and what have you. But even that, with what the Fed's doing, they're saying that's going to be bullish for gold. The
Hmm.
national debt, that is a
Yeah.
mathematical leviathan that it's like, I don't even know if I were in short of like getting to, which is everybody's talking about, with basically a default or a reboot. How do you even deal with that problem? That's a
Yeah.
whole other topic. So
Yeah.
you know
Big
it,
can of
it
worms.
right, and that's what we'll continue to look at. But I think this speaks to the fact that there is a lot of fundamental strength and reason for people to be positioning into gold right now,
Hmm.
given what Goldman is saying, what UBS is saying, and I think we're going to find several others.
Yeah. Yeah, and you got to remember too, a lot of central banks overall have gold as a smaller portion of their reserves. And as we've been talking with BRICS and all these other nations getting away from the dollar to use their currencies, most of them are backing themselves with gold. So you're going to have continued central bank buying. People are looking more and more every day to diversify their holdings into or I guess in order to add some stability to their portfolio, and that's where gold kicks in, and these forecasts, even though 2,900, 3,000, 3,100, those sound like big numbers. That's a much smaller move than what we saw when gold went from $500 an ounce to 1,000 an ounce in the mid 2000s.
Sure.
That was 100% growth. Well, if we just see 50% growth from where we are now, we're going to pass $4,000 an ounce. So while 4,000 sounds like a big number percentage wise, it's very doable. So these predictions of 3,000, I think, are short term little bumps, but I think we're going to see much higher numbers. And people that we're not one of these companies. I know a lot of these guys that we see advertising on TV and whatnot. They're very salesy and trying to push their clients to put all your money into gold and head for the hills and all of that. We're not
Right.
like that, but at this point, I think it's pretty safe to say if you don't have at least a reasonable portion of your portfolio in gold and or silver, you're really missing the boat. And from both a growth perspective and just to add some stability to your portfolio. So it's really something
Right.
that is newer to a lot of people, but if you haven't learned about it yet, you really need to get on the boat.
Right. Well, and a couple more things, and I was just reading something this morning, so I didn't have a chance to send it to CC or even yourself, and I'm not sure if you saw it, but another thing that came out in Bloomberg today, related to gold, so again, we're talking about Goldman, we're talking about
Hmm.
UBS. Now, in Bloomberg, they're saying gold is set for its biggest weekly jump in 13 months on haven demand, on greater
Yeah,
demand.
yeah,
And I mean, the bottom line is that you're right. And one thing, we look at all these things that Goldman talks about, UBS and Bloomberg, or whomever it might be. The bottom line is another, I'm going to call it somewhat of an X factor, is they're looking at things like central banks, they're looking at what BRICS are doing, they're looking at what the market in general is doing, and they look at, there's a lot of statistical analysis that goes into it and probabilities of, how much buying is going to take place. But to me, the big X factor is, what happens out there when the general public just wakes up 10% more concerned, tomorrow than they were today,
yep,
or maybe 20% more, meaning that they recognize there's that much more need for physical metal, and that's an X factor, because
yeah,
this market is already experiencing, I'm going to call it somewhat controlled or predicted gains based on these things that UBS and Goldman and Bloomberg and others are talking about.
hmm,
When you start throwing an X factor, which is the human element, which is a little bit more unpredictable, into the
yeah.
equation, that when you're already seeing these type of gains, how much greater gains would we see at that point? And that could be all bets off at that time. So
Oh yeah,
here's the
yeah,
yeah. So at the end of the day, you're right, Chris. I mean, diversification is a key. People absolutely need to have some, a percentage allocated into metals. And so tell people who are tuning in here, what do they need to do in order to learn more about this?
yeah. Easiest way is probably to call us or text us at our main number. That's 800-289-2646, or visit the website swissamerica.com. There's right on the homepage there you can submit your information. If you call or text, give us an idea of maybe what some of your concerns are too. We have a lot of materials. We have a few things listed there on the site that we talk about. Obviously, the secret war on cash is one of our more popular items. But let us know what some of your concerns are. We'll tailor a packet with materials that kind of suits your needs, and get that off to you. And we're there to answer any questions and just help you figure out, how to navigate all of this.
That's right. And that's the thing is the education is free. It's not whether or not you buy gold. That's a decision that each person tuning in or each person who calls us or has contacted us over the years, that's a determination they have to make. But the most important thing is take that first step of getting an education, a better understanding of what this actually looks like and what it could do for you and your portfolio. So
Yeah.
thanks for that, Chris. And for those of you
Hmm.
tuning in, thanks for doing so. If you're not subscribed to our podcast, please do so. We'd love to connected with you, and you can do that as well through following us on our social media sites. So thanks so much. We look forward to bringing you more information on this topic as we round out 2024 and get ready to take off into the year 2025. Have a great rest of your week.
Yep. Take care.